Hi, and welcome to Sunday Night Charts. We take a look at charts to help you with trading week ahead. I'm your host, Steve Van Meter, and moving averages, colors on your screen. 50 days green, 100 days blue, 200 days tan. Price versus momentum. Prices, general direction. Prices are headed. Momentum is a rate of change. A bullish indicator for both is positive, and bearish indicator for both is negative. Momentum often, but not always, leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance is the level buyers can't break, and support is what the level sellers can't break. Or resistance is where sellers are at, and support is where buyers are at. Keep in mind, technical analysis does not predict prices. It can be used to determine the risk of a trade, help with time in trade, and provide direction to the path to least resistance. Charting offers possibilities, not probabilities, and not certainties. All right, then this week we are going to add some volume profile to the charts. I hope you'll find that interesting. Let's start out with the S&P 500. No real change here. Annual momentum's unchanged. Just a little blip on the ultra short term. Everything else is the same, except on the price chart, what we're seeing is another tag of the 50-day moving average. And this is what bulls want. They want to see repeated tags on the 50-day moving average. They want to see buyers here, and that supports the upward trend. It's when this starts to break and then price cannot get back above the 50-day moving average that problems start to occur. But so far, no problems there. How about the NASDAQ? Price on the ultra short term and short term have flipped bearish, and it has actually broken its 50-day moving average. Let's take a look at that. It's broken down. Now, this is not a cause to worry. If we zoom out a little bit on the NASDAQ, it's done this before, and what happens, its 100-day moving average tends to act as support. Sometimes it doesn't even need to get there, but as of right now, it's likely that this thing is going to try to touch its 100-day moving average. No panic yet if you're bullish on tech stocks based on the price chart we're seeing here. You get a break of the 100-day, then you can start to worry a little bit. Russell 2000. Again, the bet on the U.S. reopening is beyond, I think, even levels the U.S. economy can achieve, but nevertheless, everyone's packed into the Russell small cap, and let's see where it's sitting at. Nowhere near its 50-day moving average, hasn't even visited since back in October, at the end of October. So again, if you're bullish on small caps, you really do want some confirmation. And confirmation at the 50-day wouldn't be terrible, although if you just look at where support is at, it's around 21, 40 to 21.50. And while we're here, even though I don't have a momentum screen on, let's take a look at volatility. It's knocking on the door, and why this is interesting to me is you see where these two lines, kind lines across the screen, these are heavy sell zones, and right now it's knocking on this door. This would be what's called overhead resistance. If it gets into here, look for the sellers to come back and try to push volatility back down. Now, at some point, sellers are going to lose that game, and boy, they've been really hammering down vol. If that gets out of the bag, this thing can get ugly quick and really unwind the broad equity market. And even vol of vol or VVIX is suggesting that yes, it is knocking on that door, and it potentially may actually breach into that sell zone on the VIX until the sell zone becomes a buy zone. It's game on for equities, but the moment that becomes a buy zone for volatility, watch out below. How about the energy sector? XLE, super bullish on it. And you're going to hear people continue to be bullish on this almost no matter what. Now let's zoom out and I'll show you why. You see the price finally broke through this supply zone, and the general direction the XLE wants to get is up here to 56. Now, if you have a charting program, you probably have a volume profile option somewhere. And I presume it might be called volume profile, but here's what's kind of neat. You can add this and it'll show up on the side. And let's zoom out a bit. And what you see is there's not a lot of volume. We'll even go out. Let's go out to the max weekly so we get all the data. There's not a ton of volume up until it gets right at this major level of resistance at 56. Now let's zoom back in on the 2 year so you can see there's just not a lot of volume here, but the trading volume picks up right in there at 55 to 56. It's resistance. So that's why bulls think you're going to see energy stocks get up there, and then that's likely where it's going to get rejected. But if you look at volume profile, it tells you where there's large clusters of shares trading hands, and that is why that is overhead resistance. On the short term, you can see The major levels of support we now know are between 42 and 44. And below that, there's a heavy amount of volume at 38. The real sensitivity here for XLE is the dollar. But keep in mind, it's going to want to go higher if it can, based on the fact that there's not a lot of overhead resistance between that. Financial stocks remain bullish as investors dump bonds and drive interest rates up, thinking that consumers are going to want to borrow at higher interest rates. They won't, but that's what the belief is. And this chart's hard to look at because it's pretty much sitting off its all-time highs. There isn't a lot of support, well, there's no resistance above because there's no price history, but below you can very clearly see support where there's some volume here. If we zoom out to the max weekly, there's not a lot there, but there's some support there at $30 per share on the XLF, and then you start picking up support just right down here around the $28 price range, and there's some support, some volume in here. But when you have these big moves through zones, they can easily become big moves back. I would say below 29, you're threatening a fast move down to 25. Obviously, we're nowhere near that at the moment, but you can see if we zoom into the 1 year, look at all that. The shares traded right around 25. That's your major support right now. Let's go on to the utility sector. This one's fairly ugly. Long term has now flipped bearish on both indicators, and 3 and 9 month momentum are falling and are negative and falling, with 6 months hanging tight at the moment. Let's go look at the utility sector and see. All right, this is good stuff. Let's zoom out a little bit. So you can see over the last 2 years, there's a lot of shares traded right around 62, 63. Can you see that volume profile? And then there's a lot of shares traded here at 60. Now that's where you would want to try to find some support, and it broke right through there. So this thing is coming up right around 58. You're going to see some volume there where people have traded hands, and that's where you're going to want this thing to come to a stop. Is somewhere between 57 and 58, right in here, because you can see this is where buyers have been at, is right below this 57 up to into 58, because where the shares are trading hands. If we zoom out, let's try that again. The major level of support isn't far below, but right into there, if it misses through 57, 58, you're really now looking at, say, into the 53, 54 range for the utility sector. And that isn't, you don't want to see some breakdown in a major bull market. You want to see everybody rising, and that is a problem. How about industrials? No change there. Wouldn't expect that. Industrial stocks are trading right with the major indices. How about gold miners? Now, we've seen some annual momentum flip on the ultra short term. Normally, you normally ignore that. Now, the immediate term is interesting, but don't expect this to hang on, because the 3, 6, 9 month all are negative and falling. And this is what I would call a false signal. This is not something that I would jump on. Let's look at GDX here. Let's see, GDX. There you are. Okay, so we've got this massive head and shoulders topping pattern. It's right at support. It's still under its 50-day moving average, this green line here. Now, could there be a bounce in here on early in the week? Absolutely possible. If there isn't, you'll notice that the heavy volume over the last 2 years isn't down until you get, you're not going to see this thing slow down until you get down here in the $28 to $29 range, with 27 being right in the supply zone, a heavy area where shares have traded hands. Now, if this head and shoulders top comes true, you flip it upside down on the horizontal line here. So you take 31, subtract 45, or 45, subtract 31, and you get 14. And so you take 14 off of 31, and it tells you this thing wants to go way down here into this $16, $70 price range. But do note, when you look at the volume profile here, you can see there isn't a lot of shares trading hands until you get a lower price point. Now, if we zoom out a bit, we can see that sure enough, there is a lot of trades at this $27 price range. Now, the question is, are people back that bought this in 08 still there? I don't know. I'm going to guess some of them probably aren't. So even here on the 2 year range, you can see this is the major level of support. If 27 breaks, there's nothing keeping it from getting down to this $22 range. Nothing at all. The only question is, are the people that bought here still buyers, or do they flip and become sellers? So what we're seeing on GDX is not optimistic. Emerging markets, price on ultra short-term and short-term flip bearish. Again, those are not big indicators that I would get too excited about yet, but volume profile on EEM is extremely interesting because this thing has virtually no shares traded up in this area, meaning if there is a downward move here, this thing can accelerate very quickly down to the $43 price range. And don't be surprised if you see that happen. Now let's move out on the price chart, and you can see still no shares traded hands there. Let's move out to the weekly. So what happens is when you see big moves between zones, you get big moves back between zones. And that's why this thing can easily get down to, say, this $37 price range, even below this $40 price range. Because you see, when EM makes moves, it makes big moves. But the major level support is going to be right here, 40, 41. That's where most of the shares are traded in hands. If those people that bought in that zone become sellers, if it gets there, then you're looking at this thing getting easily down into the potential $30 price range if there's a major equity sell-off. So when you look at this chart and you see these big moves tend to get undone quickly because there's no support there in terms of number of shares traded. All right, let's go on to, I'm guessing, the Bond King's favorite thing, bonds. TLT, no improvement there as we know. Although the 9-month is negative and rising. And these two are looking pretty close to flipping. Now that is a pretty strong signal when we see after a big sell-off, those bottom indicators flip over. Let's look at TLT. And same story here. People think, okay, well, this thing is only headed lower. But really, if it gets through, say, 145, you see some clusters of shares traded hands here. There's not much in terms of volume trading here to get it right up into 152. And then from there, you've got a little bit of gap before it runs into resistance at 157. So when you see all these shares trading hands, and we'll talk about this more on Monday on the macro show, but if you zoom in, you see, look at all these shares traded hands. And what this is telling you is half the people that own TLT sold them, and a new group came in and bought them. And that's usually a very strong indicator that there is a reversal in price. And even on the 1-year volume profile, you can see there's not a lot of resistance to move this back up. So we'll zoom out. You notice the price moves, when you get between, say, where we're at now and 154 are quick on the way up, quick on the way down, quick on the way down. Look for it to be quick on the way up. All right, what do we got next? We've got high yield bonds. These again look like a lot like equities. You see some little change on the price. Let's go look and see what's going on with HYG. Here it is. And you can see lots of shares traded right now where it's at. And you can see there's not a lot of volume profile there on the 2-year chart, suggesting that, again, if this accelerates, and now it's down below its 50-day moving average, trying to find support is 100. If it doesn't there, obviously now you're looking at the 200-day moving average where there's a bit of volume. But if you get through roughly this 200-day moving average, there's not a lot of volume to support it coming right down into this $82 price range. And if we zoom out on the weekly, you can see there's just all the shares are traded right in this band, 85 to where it is at 87. So you start getting below 85 and you've got problems. There's just not a lot of buyers there. And that's how things can get unwound pretty quickly. Remember, high yield bonds tend to lead stocks lower many times. Along with gold, and we're going to talk a lot about gold on Monday macro show. Bearish picture across here, 3 and 6 month momentum are negative and falling. 9 months still positive and rising, and probably not for long. Let's go and look at gold. Like I said, we're going to talk a lot about gold on the Monday macro show. So here you're looking at the next destination of this is 1700 is your last level of support here. Now below that, there is not a lot of shares traded hands, even not much there, suggesting that you could easily get down into this, say, 1550 price range if 1700 doesn't hold, and your major level of support is just above 1500. 100 if you look at from a volume perspective. Let's zoom out and you can see the major volume on the weeklies. And this is relatively worth looking at because you see there was a lot of buyers in here. You'll have to assume that these buyers going back from 2013 to 2019 are legitimate buyers that would probably be holders here. And if that's the case, you can see how this thing can easily slip down that far. I mean, there's not a lot of volume traded here. You got to assume the people that bought back up in here have eventually sold. The real buyers now are down here between, say, 1350 and 1200, and then there's a bit of them right in here between, say, around 1500 to 1550. So as we look at this, the danger zone for gold is getting below this cluster, below 1700, which I expect we'll see pretty soon. And then you start getting into the 1500s. And if those buyers don't come back, you're looking at back down into, like I said, and I think I wouldn't surprise me if it gets down into the 1300s. Would not surprise me given what we're seeing on the price action here. But this is not a good picture for gold. All right, last up, I think, nope, silver. I thought we were at the dollar silver. Look at that, completely bullish across the board. And let's go take a look at what's going on with silver. And again, this is, defied a lot of logic because it usually does tend to follow its big brother metal gold. And there's not a lot of support in terms of volume traded until down to 24. So again, we've talked about this before. Where is support? It's going to be in this $24 price range, upwards of, say, the bottom of 25. And where is resistance? It's up here 26 to 28. And it's holding its 50-day moving average. We'll see if that lasts. If not, if it gets below this 24, you got a big whoosh down to in here to 17. That is not something the silver bulls want to see, but it keeps hitting that overhead resistance and not moving. How about the dollar? Now here is a positive signal for the dollar. 3, 6, and 9 month are all negative, but rising. You see gold down here. It means it's rising. This is usually a very positive indicator that a bottom is in. It doesn't guarantee it. It just means it's pretty darn close, and you'll now want to look for some other validation. But if you're looking for something more consistent to buy on, these you start getting excited about, and then you look for confirmation here. So price has not flipped up yet, but let's take a look at the dollar. And I don't think, we don't have any volume profile on it, so let's just get rid of that real quick. And what do we see here on the dollar? It's now back above its 50-day moving average. And if this thing, what we're looking at is momentum is just about ready to start flattening out and turning up. It's getting very close to that. We're seeing lots of buyers here. Remember, I said it could go down into the 90, 89, 90 range. It needed to find support there. It did. So now the key is, can the dollar get going? Well, tune in Monday for the macro show, because like I said, we're going to talk a lot about gold. And well, it has a good relationship with the dollar. If gold's going down, well, guess where the dollar is likely headed. So I like the dollar, but not enough confirmation here yet, but we're close. Thanks for watching. We'll see you on Monday for the macro show. The content of this video is provides educational information only. It's not intended to provide investment or other advice. It's not to be construed as recognition or solicitation by some security financial instrument or to participate in any particular trading strategy. This video was prepared by Steve Van Meter. Personal capacity opinions expressed in this video that do not reflect the value of Atlas Financial Advising or Steve Van Meter Financial.